I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today is June 29th.
And today we're going to be going over a couple of very important things. Number one, mortgages and the Fed rate. Where are we today? Arizona gas prices, how does it affect your mortgage? You ever thought about that? Where are we in Greater Phoenix in regards to a median home price? How many homes in Greater Phoenix are active versus not active? And how many sellers are paying for buyers' closing costs? So let's get into it.
Remember, this is for informational purposes only. This is not financial advice. Tom and I were mortgage brokers right here in Phoenix, Arizona, and we really handle most of our, like 99% of our business is right here in Maricopa County, so the Greater Phoenix area. This is a national index that looks at interest rates. It's a surveys of the majority of banks out there and what rates are being quoted. Right now, we see the 30-year fix at 6.91, the 15-year fix at 6.32.
The 30-year FHA is 6.63 and the 30-year VA 6.63. Every time I say those, they're almost the exact same.
Yeah, interest rates have really come up a little bit over the last week. And really, overall, in the last 60 days, they've come up, and we'll see what happens here in the coming weeks to months. The next big event is the Fed meeting in July. End of July. So July 26th. Today, our interest rate for the Fed is right here in this. We're at 5.25. It's in this weird little bracket. They call it the 500 to 525. That basically we would call that at 5.25% Fed rate. We're in this column right here. The next meeting, there's an 80% chance, a 79.4% chance, and this is according to the futures markets, that the Fed will raise that rate 0.25%.
Now, what's interesting is, look, there's a 0% chance that they'd actually raise it 50 basis points. Usually we'll see a little overlap. You know, we will see a little lower number on the left-hand side and a little bit lower number on the right-hand side. But that higher number there in the middle is where everyone thinks. But there's 0% chance.
Zero on both sides. So it's either a no move or a 0.25% raise. But really, if you're betting, you'd be betting that there's a 80% chance at a 0.25% raise.
And remember, what that means is the market is already pricing that in.
Yeah.
So again, 80% of the investors are basically telling where that 10-year bond is going to be, and the mortgage rates are based upon that 10-year bond. So as long as they raise only 25 basis points, not 50, the mortgage rate theoretically should not change.
Yeah. And if you see this green line that we drew here, we really start seeing the interest rates. According to the futures traders, they believe that the Fed rate will start going down potentially in January of 2024. And so just want to point that we'll continue to monitor it. This is always really important to be looking at. And let's go on to next. What's something we've never really talked about really is gas prices. And gas prices in Maricopa County, something that we all, if you're local right here in Maricopa County, you know that you pay a lot in gases, but did you know that you pay a lot more than most people?
Right. Yeah. And you hear about that a lot more during the summer because Aunt Sally and Uncle Joe are driving from Minnesota and from Maine and whatnot. And they're like, wow, your gas prices are a little higher, a little different than ours.
It is West Coast versus the rest of the country. The West Coast average prices are over $4. In the California, they're really over $4.50 and maybe $5 a gallon. But Phoenix, Maricopa County, the average is $4.09 per gallon. It is less than it was a week or two ago. But look at the Midwest prices in Texas, Louisiana. There are prices per gallon that are like $2. $2.50 to $3. So it's pretty amazing. But most of the country is far less. And the reason why, if you ever wonder why am I paying so dang much compared to my the neighbors to the Midwest and the East, it is because of regulation. This was an article by the local Channel 12 News. They interviewed one of the Gas Buddy, the app that does these surveys. They asked them why. Phoenix has a lot of regulations, a lot of extra regulations. Also, because of our heat in the summer, there's what do they call that? It's these extra summer fuel.
They have a special blend.
It's a special blend. so that it pollutes less during the heat of the summer.
And as we all know, blends, secret recipes, it all costs money.
Yeah.
That stuff's just not grown on a vegetable tree. So scientists have to come up with this blend, and they make Arizonians pay for that.
I can't remember if it's ethanol in it or not ethanol that they remove or take away, but it makes it more expensive. It just burns it cleaner. But yeah, it's regulation plus the cleaner fuel makes it more expensive.
And I always thought that it was the heat factor, but if we look at that map, it goes all the way up to Washington.
Yeah.
So I don't know what it is, if it's just geographic, but you can almost draw
taxes,
a line.
I think of California taxes, the Oregon, Washington have such large taxes, but we wanted to say, okay, or look at what is gas prices? What are they in terms of mortgages?
Yeah, how does gas affect mortgages?
Yeah,
those aren't connected, are they?
Right. It's a good question. Like, is there? Well, we did it this way. If you drive from, let's say your commute is from Gilbert to Surprise, Arizona. It's about 50 miles one way. Okay, so you got a 100-mile commute, and you drive that 20 days a month, Monday through Friday, 20 days a month. That is, you're going to use, and let's just say you're driving a car like it's 25 miles per gallon. You're going to be burning about 80 gallons per month going to work. That's 300. If you multiply that by the gas price right now, it's $327 a month you're spending on gas. That basically converts to that is, when we did the calculation for a mortgage, a $50,000 mortgage today would have a monthly payment of $3.27.
Yeah.
And basically every mile that you reduce your commute, it increases your mortgage purchasing power by $1,000.
Life is complicated, so every once in a while we like to come up with something simple, and the numbers worked out perfect. We were looking at this, and we're like, oh my goodness, originally it was, if you reduce your commute, 50 miles, you can get a $50,000 mortgage, which we still have, but you could literally boil it down to, for every 1 mile that you reduce one way, you could actually get a mortgage payment. Again, it'd be a 30-year mortgage payment, but for $1,000. Yeah. And I remember, growing up and buying my first home, that was a big deal. There were these outlying communities where I was having to kind of budget, and I figured I could get like a $28,000 more expensive house by moving closer to town. So as ridiculous as this sounds, there is some truth to it. This also does not take into account vehicle depreciation, wear and tear, and things like that. So I bet you that number would actually go up a little bit more.
Right. And that's reducing your commute, but that's a round trip. That's right, to be able to commute, you know what I mean? It's part of the round trip. So it should be,
right. If you were to reduce your commute by 1 mile one way, which means 2 miles round trip.
Round trip. Yep. Okay. So where are we with real estate today? Median sales prices. We're at the end of June. We see those median sales prices at $443,000. It's been continuing to go up since January. January 2023, we hit that low. But remember, in May 2022, we hit that high at $480,000. We're continuing to go up.
That's right. And one of the main reasons is look at this inventory.
Yeah, inventory is still low. We're at 10,150. That's how many homes are for sale in really all the cities here in Maricopa County, which it is leveling off. There's not as many homes for sale, but it is getting lower, or it is continuing to go down. The high there was almost 20,000. Okay, and then seller concessions. We wanted to just kind of tell you that seller concessions are a great indicator that tell us how desperate or not desperate are sellers to sell their homes. How motivated are they?
Right, yeah. If you're motivated to sell, you're going to give concessions. If you're not, you're going to say, hey, listen, we're just going to wait for the next buyer.
Yeah, and right now we see the seller concessions on the number, so closed deals, there's about 39% of all closed deals have seller concessions, which means it's right there. There's that average over the long term. It's about 37% of all closings on average have seller concessions, and we're really close to that average. So we're really close to a balanced market. So it's not so it's very normal right now when it comes to that buyer and seller tug of war. And the average concession right now is about $4,000, also to let you know. If you have any questions for us, any loan scenarios that you want us to review, be sure to call us, email us, put a chat in the comments here of the YouTube, and be sure to subscribe and comment and like.
All right. Hey, thank you, folks.
We'll be back next week.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.